and gentlemen, to Aris Mining's channel, operating one of the world's highest grade gold mines out of Colombia. We always have the privilege to be joined by Tyron, the senior vice president. Got to get that correct. As he's going to be diving down into the financials today, giving us some idea of the balance sheet, the cap structure, and a little bit more in between. So first and foremost, welcome back, sir.
Thanks. It's good to be back.
And always a pleasure to get you back on. So I want to get right into the kind of nooks and crannies of what's going on under the hood there at Aris Mining. I mean, you guys are sitting on about 352 million of US cash. You're saying you're getting about 260 million from a streaming aspect of your business, and you only got about 370 million in liabilities. You want to kind of clarify that and exactly what's going on?
Sure thing. And maybe this is an opportunity for me to bring up the slide deck here. There we go. So what's unique about this quarter is we just concluded a merger with GCM Mining. So we more than double our market cap. So the financials are going to be a bit weird. You're going to see a big spike in cash flow, revenue, as well as on the balance sheet cash. So right now we're sitting on 352 million bucks US. I'm going to quickly flip to the balance sheet slide. There we go. We have two streaming deals with Wheaton Precious Metals. They're buying the silver on future asset production, and that's going to bring in another 260 million in funding. That funding is almost guaranteed. It's linked to certain construction milestones. So we talk about having funding, growth funding of 612 million US. On the liability side, we have 300 million in unsecured notes. These are due in 2026. Those actually offer 19% yield right now. If some of your viewers are interested in playing our credit rather than our equity. And that's rated B+. And the outlook was improved after this merger because Aris brought in another producing asset to help deleverage the balance sheet. We have some gold notes outstanding. Those are due in 2027. So that's the liability side. And then we also have a lot of free cash flow coming in from our two producing mines. Last year, or well, let's say over the last 12 months on a trailing basis, Segovia, our largest asset, did 84 million. Marmato is going to be a smaller number, but not insignificant. So I would argue that amongst growthy mining companies, and we do have a lot of growth, we're going to triple our production over the next 4 years. We have one of the best funding profiles in the space. So there is some debt, but when that's due in 2026, we will have two new assets online, and we should have basically 1 year's worth of free cash flow should cover the bulk of our liabilities.
Yeah, you guys are, oh, sorry, you're sitting in a pretty incredible space. I wouldn't mind if you could go over the share structure and just the cap structure between that institutional, insider, and retail.
Sure. So 136 million shares out, so pretty tight for a company of our size. Management owns 6% of the company. We bought most of that in a private placement at 450 a share. Our stock's trading at 290 a share right now. So anyone buying the stock today is going to be making money a lot sooner than the management team. We have a lot of warrants out, but most of them don't strike below 550, right? So there's a lot of daylight before those warrants come in. And if they do come in, they could bring in another 200 million US in cash to further buffer our balance sheet. Institutions own about 23% of our stock. The rest is in retail right now. And I'm working to increase the size of that institutional ownership. And I think that'll come with some of the analyst coverage. We now have 5 analysts covering us from 2 a few months ago. We are also hosting a site tour in November, and there will be a few big portfolio managers on that trip as well.
Yeah, it would be incredible to get some insight from the ground floor. If there's one thing investors should really focus on in the latter half of this year, you guys look like you have a lot moving forward, but what's one thing that you pay attention to?
The single biggest catalyst for this company is supersizing our second mine. So we have 2 producers, Segovia, which is humming. It's a cash machine. Marmato is a piddly little mine that we're turning into a big mine. To do that, we need a permit from the Colombian regulator. That's coming in December, and it allows us to build Marmato. And as you saw from our balance sheet slide, we're funded, right? So we're going to go from 220,000 ounces to 400,000 ounces. But I think when the market sees us stick a shovel in the ground and actually build that mine and grow that mine, that's when the stock starts to move.
Appreciate those insights. On that note, I'll pass the question out to the viewers. We'd love to know what you guys think about all of this in that comment section below. Consider subscribing because as catalysts and news continue to come down the wire, of course, we're going to update you here. But on that note, stay cool, stay awesome. And as always, folks, we look forward to catching you in the next one.